Good morning, everyone. Microphone check. Screen check. Looks like everything's working correctly here. Good, good. I've got some music coming from somewhere. And I can't for the life of me figure out what window it's coming from. Totally lost. I don't know, it's one of these windows. Jeez, goofy stuff. Anyway, as always, before we jump on in on the left side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that's inside there. If you need to read through that with a little bit more time, you can download that, or actually you can just pause the video and read it with a little bit more time. Still got to break that muscle memory, man. I guess it sticks hard in there after it's been how many years now? No, anyway. If you aren't a member of SSFTG or a part of the YouTube family, check out the join button below the stream to gain access before our next private webinar. Get access to the SSFTG Discord chat, not to mention the awesome badge next to your YouTube name when you're talking in the chat and all that stuff to show your support, and a boatload of other cool stuff. If you're trying to figure out what it is exactly that we are doing here in the room, look no further than the Day Trading Academy over on SSFTG. That comes loaded with about 19 plus hours of material, not to mention everything else going on with YouTube and the boatloads of hours of other videos underneath that. But those are all ready for you inside the Academy. Please keep in mind that the YouTube broadcast does have between a 3 and 30-second delay, depending on where you're logging in from and all that fun stuff. But if you want to level up to the VIP status, you can enjoy exclusive permanent access to our non-delayed live analysis stream via Zoom Direct Meeting, as well as the monthly VIP webinars, private VIP events, one-on-one scheduling access, the list goes on and on. So whether you're here and you're totally new or a veteran over on the VIP stream, welcome. I'm glad to have you here with me today. So let's take a look at some news. Take a look at some charts. Make sure my cat doesn't fall on my head. What in the world? It's like balancing on top of my chair right now. I kind of wish my webcam worked just so I could show you guys. This is ridiculous. Ziggy, what are you doing? Oy vey. Cat's an acrobat today. Anyway. Get that out of the way. Don't forget to grab your morning DP levels. All of those are posted for you on the morning brief section of SSFTG. Got those covered for you, as well as a couple of the levels and areas of interest for today. Taking a look at the bigger picture and seeing what's going on. I mean, the overall movement that we've got on the NASDAQ tried to get that bullish continuation bounce like we were looking at yesterday. They showed up a bit late to the party, but they did try, and, well, it didn't work. Eventually rolled back over in the overnight and took everybody out back to the downside again. Now that they've taken everybody out, here's the next question, right? Was this just a vindictive trap? We know how the NASDAQ operates. It likes doing that. It's no surprise. So, you know, is this just another trap? Did they whip everybody out just to see it roll back up to the highs again? Or, you know, what's going on? So the way that this is kind of setting up is a bit curious, because you got to see, you know, which way do they want to go with this? Is this support? Is this a trap? Or is this just an initial poke before a follow-through breakdown? A lot of times volume can give us more information, and we'll dig into the NASDAQ on the volume side a little bit later. But overall, we left behind this big old POC up at the top, and you can see what happened. I mean, we broke underneath it, came back, gone. So I think it's pretty fair to say that all of the buyers that were buyers stopped being buyers, and the market rolled back over accordingly. We filled in all of this VVP back here. Now that that's done, if we include all of that, because technically it hasn't broken a new major low, just a short-term low. The POC shifted. I mean, that's not really a big surprise, but we're not seeing any accumulation volume as of yet. It's still distribution, which would suggest we're still in profit taking. If we narrow this into the more recent high, then we can start going in overboard and all that fun stuff. And like I said, we'll get into that a little bit later. But right now, it looks like we're trying to find some support down here. They haven't built the volume to support it yet, but they're trying. Looking at the S&P, nice wash to the downside here as well. Fantastic channeling on the highs, equidistant to the lows, bounced right off of it. The big thing here, if we look back to where the market went into, giant VVP zone. They didn't fill it all the way in. There's actually still a little bit left, but better than nothing, you know, and looking for a continuation or a rotation back to the upside now. Same thing here. I mean, we left behind the POC back in the dust. So Bring that forward a little bit here. Nice breakdown, push back up to 41.69.75. That's going to be the zone of resistance to try to drive the market lower, if it does come back. Otherwise, right now, I mean, buyers are demonstrating some pretty good support. Volumes going down, which would still suggest profit taking. Over on gold, mostly just kind of a wedge. There's not really much going on. We got a trap above the highs. Now it's trying to roll back over. I mean, we're running right back into the low side of support. They're not really able to accomplish a whole lot. The big thing that does stand out is this very, very obvious divergence that was going on. And now that the market is coming back, we've got ourselves a potential, at least, it hasn't happened yet, but we've got ourselves a potential of the good old whack-D coming into play. We've got a Mac whack right around the corner. If this can go just a little bit further up, that would be the zone for sellers to attempt to try to take back over and drive the market back down. So gold is very close. It's very close. Over on crude oil, cycled off the highs, immediately rolled back over. There's not much else going on. I mean, crude oil, such a disaster. It did eventually grind its way back up yesterday, I guess, but now the majority of that's been taken back. I really don't even want to pay attention to crude oil these days. It feels like it just goes in and out of favor, and right now it's definitely not in. Just kind of stuck. I mean, we've got this nice breakdown, but realistically, it would make sense to see another leg to the downside. Even from a micro phase, we've got the first leg down, extended middle one. Usually the third is the same size as the first. That would still be looking for a gap fill to the downside. But, I mean, these bulls are coming in pretty strong right now. Over on the euro, we have a value pullback. Finally. Is that to the tick? Jeez, oh Pete, it is. Wow. All right, so in terms of the value pullback, we had the previous pullback, which is 0.44%. That took a decent amount of time. If we go into this one here from top to bottom, 0.44, led that right in. I mean, wow. I certainly wasn't expecting that, but wow. Nice little support coming in off the bottom there. They're trying to get it to rotate back up. The concern is obviously this is cycling off of a very, very high move with not, I mean, there's blatantly obvious divergence on the highs. You'd have to be blind not to see that. So the overall movement is very overextended up, and buyers are looking for a pullback. That doesn't mean that the trend has to completely reverse, but a deeper pullback would at least be expected. So, you know, are they going to get a value pullback? That's where a lot of buyers will come in. My favorite, though, is a double value, where you double that move down. So 0.88 would be the objective, a little bit lower. So if we drag that down a little bit further, 0.88 off of the highs would put support back to 1.198685. That's significantly more interesting because that lines up a lot more stuff. We have an overshot on the highs of the channel. That would equalize an overshot on the lows. We have the lows of the channel as support. We also have, at that point in time, by the time it actually gets down there, be about a negative 1 dynamic rotation down, at least. And looking at along from the bottom, this is obviously where the whole trend started off. First rotation up was off of an L2, kicked up to an L1. Now they're starting to pull back. We're back in an L1, but if they fail at the L1, we know that the L2, they were kind of climbing the ladder. Usually when they try to climb the ladder and they fail or they run out of rungs, in this case it's L1. If L1 fails, then kind of see them slide down the ladder a little bit, and that lines up almost perfectly with an L3. So there's a lot of things that you would expect to see in this area. It's just got to go further. We've got to wait for it. Bitcoin finding some halfway decent support. Got a nice little wedge formation on the MACD, which did break out as a precursory heads up. That led into the continuation to the upside on Bitcoin. We still haven't seen a higher high. I mean, on the really, really small kind of localized swings, sure, but nothing on the big side. We still have all the way up above 57.5 before that happens. And then over on Ethereum, same thing, except Ethereum, man, they are demonstrating a metric ton of support down here. Bitcoin is making lower lows. Ethereum hasn't even been able to come close. Well, I mean, they came close, but then immediately failed out. Those are really big clues. So the fact that it went back down again, jumped up, went back down, jumped up, you know, that's showing some pretty solid support. And again, the MACD showing a break of the wedge, everything would be suggesting further movement up. We'll see. All right, looking at the daily chart. We are pulling back off of the highs back to the previous all-time highs that we broke out of. Again, we're stuck here. This isn't a surprise. Typically, usually get stuck here between what we've seen, at least 3 to 7 days, right? It's usually closer to 3 to 5. We had 3 already, and then now we're back again. So the problem is I don't want to get stuck here again. I don't want to get hung up on this zone. This could just be a breakout pullback. So if we do demonstrate some bullishness, there's a reason to believe them. Right now, though, L1, that doesn't happen until the 13,737s. We got some room. All right, I got to figure out where this music is coming from. Isn't there a way to see what's broadcasting audio in your volume mixer? No. It's a banger of a beat, though. I know I'd immediately get flagged for copyright, so I'm not going to play it, but man, whatever this music is, whoo! I kind of don't want to turn it off. I don't know where it's coming from. Whoever this ghost is with his ghost music, at least I got good taste. Anyway, I can't figure out where the music's coming. My volume mixer doesn't show audio coming from anything, which is even more confusing. Okay. Anyway, on the 60-minute, the NASDAQ is continuing back to the downside. If we draw the overall move back, first off, we kind of have to take a step back here and realize what's going on. The bigger picture here, I mean, look at this thing. This thing needs a pullback. It's almost a necessity at this point. So if we can get a pullback, if we're looking at the bottom side, we've got the L4, we've got the nice L3, L4 rotations off the lows. Those are perfect. But then, I mean, the nitrous just hit the floor. Never hit an L1. Didn't pull back. No L1. No L1. Missed the L1. Did that one actually hit or miss? I think that one missed as well. Yeah, that one missed as well. So they missed the L1 again. So there's this incredible amount of bullish pressure that when they finally did get the L1, you can see they spent very little time there, and then it shot right back to the upside. But the concern is that once they hit back to the highs, everybody started taking profit, right? This isn't continuing an L1 trend like we had back here, where it's break, L1, break, L1, break, L1. We broke, and then it just kind of fell flat on its face. Maybe this is just a reattempt to get back to L1 value so buyers can get a final dip before continuation back up. That's definitely a possibility. A retest of L1, especially if it's short-lived around 13,803, that's going to be a really nice zone of interest to keep our eyes on from that perspective. That said, if there isn't a strong response there, then seeing this dip a little bit further to that bigger L2, that makes a lot of sense. So, I mean, we're going to have to wait and see what they're going to do here, but the first zone of support is going to be stepping up into the 13,800s. If they don't show up there, there's not really anything until 13,690. Pretty wide open door. Looking at the 15-minute chart, we know that we cannot rely on that repetition as far as timing goes, so we can get rid of that. And if we go back a little bit further and kind of see which way are they going here. Well, first, let's look at the near term, because we do know that this sell leg down will have potentially trapped a lot of sellers. Where was their break even? That was right there. So we came into that break even point yesterday. They kind of played around with it, went above it a little bit. Now they're back below it. realistically, right, if these sellers were in, they waited through all of this, came all the way back down, went back against them, now it's back in their favor again, I would have a really hard time believing that these shorts are going to be sticking around too much longer. So if it does break above this high of like 896 or so, then realistically, that might be a little bit of an issue, right? That might be a cause for concern that there's not going to be as big of a wall as you would expect to see here. And then it breaks out through the highs and keeps going, and you get that giant reversal. And if that is the case, then, you know, we've got that does solidify the trap on the bottom. Even more proof. So if we're looking at that bigger swing from way over there, they did rotate back up to a new high, and that was a nice L4, L5 rotation off the bottom. So now that we're pulling back, you know, who do you think's coming in down here? L5 swings. Because they can buy, their stops can be very small in the grand scheme of things. Still pretty wide, but relatively small considering that the target's back up into the L1s towards 14,000. So very easily 2.5, maybe closer to 3 to 1 reward versus risk. So definitely a lot of buyers, especially on like the option side of things, longer term, the QQQs, that kind of stuff. They're going to be hanging out down here big time, especially as we get closer to the open. If we can get a dip back on the open, especially if it's a quick bounce off of those 833s, that's even more potential proof. So let's load this up on L5s because that's the one that's holding. Now, if we look at this on a volume perspective from the bottom to the top, the high was actually put in over here. That was a lower high. So if we look at what they did off of the volume, very nice support, very nice support. It broke, they gave up. Pretty obvious shift there, but let's go forward and see what the volume looks like now. Maybe they've had enough time to build accumulation. Nope. POC still resting up at 13,992. Now, given that we are seeing volume beginning to build down here, you can very easily see how they could spend some time down here and build up a nice little volume node, which would further exemplify that build, right? That's the accumulation. So L4, L5, still big zone of interest if we can get a dip at the open. Upside objective, though, has to be a bit narrower. We know the volume is resting in around the 90s. Maybe a bit ahead of the 14K. We can also see, and further proof that those are potentially stuck buyers, in the fact that it pulled back and built accumulation volume and then just ripped their face off. So given that movement to the downside and given that it came back and gave them a chance to get out of breaky, I mean, everything lines up to assume that these are buyers. So that's a fairly safe bet. And if they're still in, we get a rotation back up into that area is going to be very interesting. Do they want to get out or do they want to try to hold on for the bigger move? Even the shorter term accumulation, maybe. We'll see. As far as the morning session, we started the Asian session off, attempted to go higher. It couldn't even make it a half deviation up, not even by the Euro session, before rolling back over. So the Asian session didn't do much. European session overlapped it. We finally do have a breakdown. That breakdown is about 1.5 deviations. What a shock. It's almost like that happens every single day over and over again. So now that we have this rotation and this obvious support off the 1.5 deviation support on the Euro session, their objective is to get back to Euro session and see what do they do here. Now, again, utilizing some previous market interest, because we've seen this before, where the Asian session doesn't go anywhere, right? The Asian session doesn't go anywhere. That's what we're looking for right now. Okay, here we go. So the Asian session here, this is back on the 13th, didn't go anywhere. They went sideways. The European session didn't quite overlap it per se, but close enough. Attempted to rotate up and then failed out of the highs. It was treated as a range. So that gives us a little bit of a clue. We've already seen that rotation. Where did this market go? To the other end. And not only did it go to the other end, it went way through the other end. It blew through the base. Give me 1 second here. All right, I'm back. Sorry about that. Okay. Ghost music still there? Yep, sure is. No idea where it's coming from. Anyway. So here is another example where we had the Asian session that was going, and it rotated. Euro session didn't, I mean, again, it didn't completely envelop it, but close enough. Rotated up, we saw the failure. It went, in this case, it didn't go as high. We went about a little over the halfway point and then rolled over. But it equalized itself on the bottom and then found a range down there for the rest of the morning. So that's something to potentially keep our eyes on. Let's go back and see if anything else. Here's another one. Asian session into Euro session. Asian session is actually wider. The first attempt down was a failure. They made a lower high, but they got stuck there for a really long time. So either way, even if it does continue, or even if it does reverse, it creates a very obvious zone of support first. So if we look at today, we've got this move to the downside. If it's going to come back down, then reliably, we can assume at least that this low around the 817s to 820s is going to be that zone of support. And if the market is going to rotate back to the upside, then we would expect it to deviate above the highs about the same amount that it's deviated lower. So that would potentially allow for, man, one heck of a rally to the upside if that's the case. That would push it all the way back up to 14,009. So, I mean, man, there is some definite potential on today's table, if you will. Okay. I mean, it's got to be coming from a browser, right? So, close that. That's not it. I doubt OneNote's playing music. Nope. Okay. Oh, I found you, you rotten bugger. Aha, SoundCloud. Trying to get away with hiding behind the scenes. Found it. Okay. Anyway. Kind of curious. I'm keeping an eye on Dogecoin today as well. Doge, they've got a lot of meme-y things. Remember, today is 420. The meme objective was originally $4.20 by 420. That seems a bit unrealistic, but not impossible. More likely, though, we see the other meme objective of 69 cents on 420 if we can get a blow-off on the highs. Don't mind my caffeine. Obviously, I know there's a lot of, like, haha, funny joke stuff, but really, these are, this is the first time, I think, in history that we're actually going to be able to utilize our meme knowledge as technical analysis. This is like a new breed of technical analysis. Now we're going to have to go through meme folklore to find specific locations. The last one that I can remember off the top of my head was when NASDAQ went over 9,000. That's been a minute, though. Let me put Dogecoin up in the corner here. And see what kind of movement they can get going. Due diligence, yeah. Morning continuation back to the upside, trying to bounce ahead of the open. We've got the open in about 2.5 minutes or so. As far as the bigger picture across the board, the euro is obviously in a major zone of interest on this huge value play off of 0.44. That's already seen a rotation back to the upside. Otherwise, though, I mean, swing areas of interest, really not sitting on top of a whole lot, honestly. I would like to see gold maybe slide a little bit lower. Nice little 3-press low could be a great spot. But, I mean, that's about it. I'm not even so sure how this just looks so gross. It's kind of like a descending megaphone. On the crypto side of things, EOS still relatively down-weighted. We've got mostly a wedge. Litecoin with a potential trap on the lows at around the 240s. If I look back, hang on, give me a second here. Let me look back on Discord. What levels were we talking about on some of these? I'll just do it that way. That way we can kind of keep an eye on the open here. So what was the first one? Basic attention token, BAT. BAT was at $1.21, which just hit this morning. A few times as well yesterday and the day before. So far, though, the $1.21 mark holding relatively nicely. Bitcoin, the major objective is 47,662. We didn't get that drop. That never happened, unfortunately, / fortunately. Ethereum was 17 in the 1795s, didn't pull down that far. Link was the other one that was an objective at 2798. They did not make it that far down, so that one did not hit either. Lumens, XLM, I wanted to see that get down to the 40-cent mark. Couldn't quite make that one. 43 cents as far as they went. Nexo was another one that we were keeping an eye on at 249. It couldn't even get through 3, so not even close there. And DOT was at 34, which is actually still hovering around 34, slid as low as 31. So DOT's still in a nice zone of interest. That's slim pickings, though. Man, there's not very many. If we look at the overall volume on the move down on DOT, we can see that the volume control is low. That's a bit of a problem. Buyers are going to have to break back above 36 in order to even get this to rotate back higher. Too many issues for DOT right now. Still got time. Oh, and then, of course, Doge. Can't forget about old buddy Doge. We're going into the 9:30 open. I typically don't do anything at the 9:30 open anyway, so if we can get a volume dip back to 31 cents, yeah. That would be the zone of interest. We're back to the Euro session, inside the Euro session, and back to settlement. If we look at the overall movement to the downside, I mean, it's fairly obvious that we started above the highs. They rotated down, held an L1 nicely. The secondary breakdown, sellers tried getting an L1. They got railed. Came back, let them out of break even. Now we've got the L2s. L3s are next. So the L2s have been given a chance. The L3s are the ones that are kind of sitting on the back burner now. Back up to settlement, shallow pullback down to the Euro session lows. Kind of curious twofold. From the volume from top to bottom, we had a very obvious rotation. Right there. Wow. Ping! Gone. So the shorts who were short, they're not short. They're gone. They're the other way. If we continue this a little bit further forward and we see what's going on, we now have, again, just what we were talking about. We've got that accumulation volume to the downside. They spent enough time there, and the open also helped that it happened there. So if we are going to get a rotation back to the downside, likely that we find support back in like the 855s. That would be a significantly better zone of interest. We're only about 2.5 minutes in, so it's hard to gauge the first 5 volume yet, but we can at least kind of see. They're forming it at the top near settlement. Whoa, POC shift, 894 quarter. Oh, okay. This is the same thing that we saw yesterday. I remember yesterday we had this rally up. We saw the POC shift. They came back down. Right? We saw this move down. We had a lower high. They failed down again, another lower high, and then gave up the ghost all the way back down. So this could be a little bit of an early sign. We're at the open. Sometimes the early sign's the only one you get. And we're seeing a lot of sellers respond too. Well, the previous volume cluster was down here, but they've totally shifted it now. Oh, never mind. Just kidding. Shifted it again. 13,872 now. Volume popping back up. So if there were shorts who were shorting back in this area off of settlement, well, they got out. Now they're out. This is why trying to track the volume, it's difficult to do at the open, but it's entertaining. It's kind of like watching a soap opera unfold in front of you. See what happens when they break through this volume at 872. If buyers are looking to hold on to this crack through, it's going to cause some problems. See if they hold it as resistance off of 872 and try to push back off. Yep, there it goes. So again, it happens very quickly, but if you're on a scalper's perspective, you can see there's definitive scalping opportunities in these zones like that. Incredibly low risk if you can nail the entry. And also, if you're looking to go long, like if you were looking to buy the pullback at 872, let's say you were looking at it the other way. Maybe you wanted to be a buyer on that pullback. As soon as it failed through and you see that snap response off 872, there's no reason to hold it anymore. You get out way earlier. It just makes more sense, you know? Coming back up, retesting the 872s. Shorts still being forced to short pretty far down here. 872 is going to be a more reliable zone of interest. 10 seconds left on the first 5. All right. We've got the volume node on the S&P's first 5 at 41.44. And, geez, on the NASDAQ, they did end up closing at 94.25. Wow. We've got a big top-weighted POC up there. Oof, that's vicious. Keep an eye on this next rotation up. Ooh, they're shifting the POC again. Man alive, this volume moves fast at the open. So with this shift in this POC, we can see what buyers are trying to do in the short term. Buyers are trying to accumulate this pullback in the assumption that they'll be able to get another leg back to the upside. So we know their objective, right? We've got the first move, the bigger leg, the deep pullback. They're looking to get back up to probably towards the highs, maybe even a lower high. So if we see them fail, well, there's that POC shift, 13,870. I'm going to look for a continuation short on this with buyers getting out of the way. And if they fail back above the 370s, that would be the clue. Also a potential shot to get a better entry. Nice little break above. See if you can get this little snapback. It's likely that a lot of sellers are going to be getting out of the way now. They've been handed proof that the short side has failed. They've broken back above the volume node. I tried to reverse long with 2, but I didn't get it. I only got the 1. Nice target back up at the highs, though. That thing moves so fast. So again, from these scalpers' perspectives, there's a lot of small little micro opportunities in here that you can really play with. It might be better off looking at it like this. It's just called the 500 tick the microscope, but we're back up into this volume cluster. We've already seen the Euro session highs act as resistance. I'm kind of curious to see what they do again. Shift this forward a little bit. We're back up to these 894s. That's the first 5-minute volume cluster. Likely a lot of sellers will attempt to push off of that, especially given that settlement is right there too. Oh, jeez. Didn't quite make it. This is kind of the last ditch for sellers. If they're going to hold it down, this is where they have to hold it down from. Because if it starts breaking higher, you can see on the 15, then we start reversing trends, and that causes a lot more problems. And the bulls are putting up one heck of a fight. Testing settlement. Trying to break back above. Give me 1 second. All right. Sorry about that. I had a strange phone call from a number I've never seen before. My wife forgot her phone. Zone of interest, again, going to be a pullback to volume. Now, from this perspective, now that we've built a little bit more information, potentially sellers were again accumulating, trying to get that secondary leg to the downside, which so far has failed. If we get more movement higher and a higher low, likely they're going to be jumping ship at around the 870s. Also hard to ignore the potential of a 3-press wedge top up here. At least for scalpers. Fairly obvious diverging top. Not that that wouldn't be obvious, just looking at the big blow-off candle on the high. The blow-off candle on the top isn't necessarily the problem. The problem more so is where they're doing it. It's right at the bottom of the Euro session lows. And the last time we saw, if that holds and it breaks down, they're usually going to be coming back down towards the low closes around those 820s. So if buyers can't show up to the party, well, it's go time for the sellers. A little more continuation down. Those 870s are a big zone of interest. Ooh, big pushback through. Now we got to see him jump back up above it. A little more continuation. There we go. There we go. Little more. Keep going in this final portion and get through these averages, and then we can see this thing keep pushing. The volume node is ahead, which is nice, so that gives us a little bit of benefit of the doubt, but if it starts pulling back too hard here, I'm not going to want to stay in. All right. I'm out. Nice little scalp bounce there. Couldn't quite get the follow-through, though. See if they want to bounce off of that 870 again. Oh, are they going to shadow bounce it like 2 ticks? That's not nice. Come on now. Absolutely unnecessarily rude. And the kid, look at that. Right there. It's like, haha. You missed me. Mm-hmm. Back up towards the volume node, 94 quarter. This will be a big zone, but for obvious reasons, I don't really want to short against this. I think buyers have enough fuel here to stay in now that it's finally broken away. Immediately after I got out. That's fine. Doge still hovering around the 38-cent mark, although on the 15-minute chart, that's a really nice 15-minute bar on the bottom. Looking at, just for further clarity, Binance data feed. S&P is back to the high volume node. POC shifting up now on the NASDAQ. They're beginning to shift the POC up towards settlement. You can still see the sellers aren't done. They're trying. They are really trying to get this to rotate back lower again. POC shifted up at 894. Sellers trying to push underneath. It will be a big clue. It's still really difficult to sell this market because you'd be shorting directly into the Euro session low. And the 15-minute, gotta say, still looks real strong to the upside. Just maybe not here. You could almost taste a vindictive little trap down here in the 850s, can't you? It's the NASDAQ. We know how they roll. Crude oil kind of poking the low. We're back at settlement again. There's not really a whole lot going on here from the crude perspective. At least not on the 15-minute. If we zoom into something maybe a little bit faster, let's go to a... Might have to go to a 1 minute because we're dealing with a pretty finite point here. Yeah, look at that. To the tick. So we have a to the tick bounce off of settlement. We're building a fairly decent zone of interest. And again, the reason why I like it down here is because we overshot the highs. Now we're expecting it to overshoot the lows. This is a value area by a long shot. Fairly obvious divergence at the lows. It's still pretty early. They tried to make a new high, but totally failed. So again, it's early to the party. This is kind of the last ditch for buyers if they're going to take it up. If it starts failing through here, then we'll probably see another accumulation phase that it's going to get stuck in for a bit. So what I want to see here on crude oil, from the 1 minute perspective at least, would be a rotation back up, maybe a little bit further. Honestly, it'd be kind of nice to see the sellers try one more time and get hung up on that inside swing, and then see it rotate back up from there. Hit this, of course, find resistance, like always. Preferable, again, perfect world scenario, would be off of that point. And then, again, vindictive NASDAQ, probably get stuck there for a second, and then see more like this. So again, this is fairly early to the party if the market's going to rotate from here. If it's going to take more of a sideways approach, then we're probably going to see something like a deeper, higher low, and then go. Either way, we're probably going to be stuck here for a bit. So no sense in jumping the boat. Probably got plenty of time. The euro is also in that major zone of interest down here. Let's narrow into a 1 minute chart and see what this looks like. Jeez, to the tick. Man, what a bounce. So, I mean, realistically, if swing longs are looking to get in on this and they want to see a rotation up, they know that it's only rotated off an L3. L3s are still viable. Like, it can still rotate off. There's nothing wrong with that. You'd preferably see an L4. Right now, that would be back at around 1.20485. Again, still very early to the party on the euro, but they're trying. Definitely trying. Back up to the 3 press wedge top. 945. $10 right around the corner. I mean, again, as far as the news calendar, or sorry, lack thereof, there is none. We don't have any news. Today's Tuesday, so we get the API numbers later, but nothing really to worry about on the news front. Accumulation volume attempting to build with the POC cluster at 894. Pretty obvious to see there's a big old VVP resting at 8250. Depending on how long it takes to get there, that could also be a really nice lineup with the bottom of the wedge. Although it's going to have to sit here for a long time for that to happen. On the S&P, looking for... Oh, I'm sorry, not the NASDAQ. Go back to the S&P. There we go. On the S&P, we've got 2 minutes left. If it can really rush down here quickly and go bear engulfing, then realistically, it wouldn't be a surprise at all to see them push down to this volume node and then bounce back up again. I don't anticipate a bear engulfing candle triggering. It's a strong candle in a non-strong trend, or a non-trending market, rather. Use the correct English here. So it wouldn't make any sense for sellers to take that entry, which means that buyers have the higher probability from a scalper's perspective. So 44, 43, 42, that's going to be the zone of interest that fits a lot better. Now it's got to do it relatively soon. If we start getting under a minute, then that's not going to be... That's not good. little bit more under a minute now. So if it were to just rush down and hit 44, there's a potential that it could close really, really strong, and that would cause a further slide lower. So it's no longer worth the risk if it were to trigger in now, with 40 seconds left in the candle. It's still a viable location. It may still bounce there, but given the amount of time left, it's going to have a little bit of a harder time. What I would rather see is a weak bull bar and then buy below that weak bull bar as an attempted dip buy. Why is my Ethereum chart on a 500 tick? What the heck? Here we go. I didn't even know Coinbase supported tick data. It's kind of cool. Yeah. It's too strong of a bull bar. It would make more sense that buyers defend the opens at 47.50. Especially considering that it's already triggered above the bull bar's high. They're not necessarily going to want to see it go bear engulfing. If it does, it'll probably still bounce up, so the likelihood is still upward, but... NASDAQ, potential inside retest of the wedge high, although we're not seeing the volume shift per se. Ooh, gold's getting really close to that Mac whack. Ooh, they're getting close. They got a little bit more. By the time they get up, man, if we can line that up, get the whack D lining up with the 1776. Ooh, S&P. Whoa. Whoa, really? Oh, hang on. I wasn't expecting that. 47.50. The S&P's never that kind. I was not prepared for that. That happened way faster than I thought it would. Okay. Looking for the exit at 46.50. Obviously, this thing just hit the hammer to the downside, which is fine. Again, a big flush down here is much more likely to accumulate it back to the upside. Yeah, and it jumps right back up through, so... So again, on average, just scalping, that's an average of 1 point, although the majority of it has to go to commissions in that case. That's the trade-off for probability. Blit. What happened? It's 9:52. It's not like there's some news announcement. We did come back and we did test that 896. So in terms of a violent response off of the lows, I mean, from the NASDAQ perspective, it makes a lot of sense why they jerked up so quickly off of that 906. It's a great implication for more bullishness to come. Potentially a lot more bullishness to come. And remember, the upside objectives, if we do rotate higher, that's all the way back up to 14,010. We've got some room. Should have bought the NASDAQ too, where I was looking at earlier. All right, well. On the NASDAQ, we're still holding the... Oh, that's right. I made it not global. The 893 quarter. This is the previous all-time high. Actually, you know what we should do? Just so I can differentiate. Let me make this, because this is no longer the all-time highs. This is. This is the previous all-time high. No, maybe not 5 or 10. How about 5? Actually, that might be a little better. There we go. All right, very strong bull response off of 896. Seems like there was a big cluster of volume that built up around these 915s. Back up towards the Euro session highs. Crude oil breaking down a little bit further. Which sucks, because that invalidates what I wanted to see here. So now we're going to have to wait a little bit longer. So the euro does have, or I'm sorry, crude oil does have a new low below the low. The best world scenario would be a rotation up and hold it from the inside, but we still got some time now. On the Euro's perspective, kind of dipped through settlement, trying to break back up. Really gross looking. Kind of looks like maybe a bear flag a little bit. There's not enough there yet. S&P's all the way up to a bull engulfing candle now. 20 seconds left on the bar. So likely when this candle is done, this will have gotten a lot of potential shorts, although not all the way down to break even, would have gotten a lot of shorts, at least maybe stuck, trying to, thinking that we're at the highs of a range, weak bull bar response, micro double top, looking to short underneath it. I could see that. They'd be at 46.75. They technically fill the scalp. So, job done. I don't want to be a buyer on the top of this engulfing candle. I can tell you that much. Buyers triggered in at 51, 50, 49. So if you get like a 3-point pullback inside, I wouldn't mind that. 48, 47, 46, something just a little bit further in. I just don't want to buy the top. Volume node on the first 5 for NASDAQ still at 94.25. The POC on this move up is at 96. Although still building a lot of volume at that 915. S&P still got 4 minutes left, so plenty of time. Came one tick away. The NASDAQ, sometimes it's nice to see if the NASDAQ and the S&P are lining up with one another. Yeah, it's definitely helpful. From the NASDAQ perspective, a dip lower would be defensive around the settlement and around 894.25. Although, keep in mind, the NASDAQ and the S&P don't exactly have the highest correlation in the world. Something like this would be more beneficial on like the Dow and the S&P, the markets that have a very, very high correlation that you can rely on a bit more, I think would be a good way to put it. Plus, not to mention the micro landscape of what's going on here from the S&P comparative to the NASDAQ. Like right here, the NASDAQ's attempting to get a 3-press top. We've got a lot of potential failures. There's an undertow the entire way across. The macro phase on the S&P might look totally different, and it would invalidate, the potential reason as to why. So don't necessarily rely on correlation too much. It tested 48, bounced immediately up to 49. I didn't get filled. If it goes beyond 49, then I know I missed it. There's nothing I can do about it. Come on back down. Come on back down. Ugh. And there it goes above 49. Well, that's not fair. Get the snickets, the snickets, the tickets to the snot fair is what I was going for there, but we'll stick with snickets. That's fine. Jeez. My long-standing reign of my incapability to speak continues. Euro, where are you at? Did you accomplish the whack D, or not the got a continued breakdown. Gold. Oh man, gold's close. A little bit more. I wish there was a way to have a on trigger, like place sell order on test of MACD level. You know what I mean? Like how it's a little bit weird and not your norm, but interesting nonetheless. We've got 10 o'clock right around the corner, although there isn't any news at all. A bear engulfing candle on the S&P, very unlikely to stick. A bull engulfing into a bear engulfing, doubtable that that's going to hold up much. And if it does, we have the first 5 volume support to back it up anyway. So S&P scalpers have a shot at the engulfing bear side at 45 quarter. The assumption is that there's going to be a lot of sell stops there, with sellers trying to get in for a move lower on the S&P. I'm approaching it more on the mindset that this sell move, if it does go bull engulfing immediately into bear engulfing, I don't really believe it. I got to cancel him now, though. Nope. It did not go bear engulfing, right? That was the entire purpose of the trade, was for that to go bear engulfing, and it didn't do it. Now we have a different scenario. We have a very strong bear bar on the peak. No thanks. All the wicks and everything is still happening down here. So the line of support for low probability but high reward buyers, 47.50. So buyers on the S&P are still trying to hold up this opening base at around 47.50 to get it going higher. Ooh, I just saw gold pop higher. Are we there yet, gold? Are we there yet? Are we there yet? What the heck? Why is my window so weird? What is this crunched up size thing that they've been giving to me? I want this to... Kind of curious. I'm not quite there yet. A little bit further. Open it again and it's down here again. Whatever. Unbar close. Gold. Definitely have my eyes on gold. Nice little pullback here, back to the volume node. Scalpers will be looking to potentially still bounce off of this, but... Oh, jeez. I was going to say we just shifted the POC to the highs, but as soon as it even breathed the same air, POC shifted right back down again. Alrighty. Fairly obvious, still, big undertow across the top here on the NASDAQ. That at least is a forewarning that a deeper pullback makes a lot more sense. So from that perspective, looking at the longs, if we're looking at continuation, we have a rotation off of L3 that continued back up off of an L2. Next dip was back to an L3. Next dip was to an L2. So we're L3, L2, L3, L2. We've got a continuation up. Now we've got L1s. So kind of with the same mentality of what they did before, L2, L3, L2, L3. Now we've got L1. Probably go back to L2. L2 is right back to the bottom of the Euro session. Swing longs will be approaching this area because the risk doesn't have to be very big, but the reward is huge. So options, swings, that kind of stuff, that's what's going to be hitting in this area. Canada approves 3 ETFs for ETH. Nice. We've already seen some initial support off of this L2. The next zone would be a quick little retest and a 3-press wedge low, although this could also dive to a steeper 3-press low. Either way, buyers will definitively be buying on this dip, looking for a continuation off of this L2. Didn't hit the bottom of L2, but definitely putting pressure on. Now the bottom of L2 tests. I'm going to reduce a little bit on this move. We're not getting that bounce back up that I want to see. Nice continuation back up. The last one's the last one I'll give a shot, but they technically haven't hit the L3. Technically. If they do, then it's just kind of rinse and repeat from before. So I still like this zone down here, but we don't have to carry a whole lot of risk. If they're going to bounce, they're going to bounce. Nice pop. Why does my volume thing keep moving? Oops, my 5-minute volume node moved. Hang on a second. Back up to volume. There's the target. Beautiful. In hindsight, yeah, I could have held on to all three, but it was charging through the L2 way too aggressively. It's not worth the risk. In the end, it did get the job done, but not in a clean way, that's for sure. Now, keep in mind, the earlier buyers who were buying the top of L2, who maybe just had limit orders resting there, they wouldn't have been filled as low down here in the 89s. So, you know, from that perspective, that would be a little bit higher than break even. But if this starts rotating back through this 89 quarter, then that would potentially suggest that the buyers who were buying are getting out. And if they're getting out, then this is probably going to push back down to get an actual test of the L3. And I'm kind of curious. Ooh, man, that 3-press wedge lines up real nice. The other concern, although it's going to have to come up pretty far, is that we have a 3-press confirmed undertow on the highs, although it is on the 500 tick, but it is a confirmed undertow, and now we're getting a breakdown. I mean, I know it's a whack D on the 500 tick, but those can still create some pretty big moves. Technically speaking, the L3 still has not been hit, which means these L2 buyers have not been invalidated. Although they've been closed underneath several times. Gold, 7 minutes until the 15-minute candle closes. Getting very close on gold, though. I'll leave this up over here. Volume node holding his resistance again. This earlier leg to the upside had the earlier volume node, which was at 896. Buyers were holding it there. They broke underneath it, now testing his resistance. I mean, if the sellers are going to push this back down and they're going to hold with that miss on the top, whew, man, you can feel the amount of pressure that buyers are under. Like, wait a minute, what do you mean? How is this failing? So there's a lot of buyers that are feeling like they're a bit on the back foot here. That said, a lot of sellers from the lows are very much also on the back foot. If we look at the bottom to top, their sell side is right there in the 96. So if we break above this 96, that's game over. What are we looking for on gold or the WACD? So obviously you can take the fractal approach, which is usually the better way as far as timing goes, to notice and understand that, okay, we're at the point of interest. The MACD is testing the trend line. The market's above. It's at new highs. This is an optimal spot to be a seller. Then you could go into like a 5-minute chart, or maybe even a 2-minute chart, or a 1-minute, or a tick chart, and narrow in on a potential entry zone. But this is the zone of sell response. Whenever the MACD is at or above this trend. We're not quite there yet. It's close. But if we get above that area and it creates an active reason to sell, then you better believe I'm going to be all over that. Longer term holds, though. That's more of a swing perspective. That's not like a scalp. A nice flush down to a 3-press wedge low. I'm going to even look on the narrower side because that lines up almost perfectly with the L3. It's a quick little trap underneath the base. Right around that 73, 75 area. Nice dip. Jeez. Immediate response off of that. All right, well, very nice target objective. I was only able to grab one. The first objective when I'm looking to buy off of the L3, if I'm scalping one of the positions, is to go to the next one, which is an L2. That's why I took my target there. If you have multiples, you're looking to do the same thing the whole way up. The top of the L2, volume cluster, the L1, top of the L1. All of those are objectives. The POC is going to be the next major one, which it's kind of rotating off of now. But, jeez, oh, Pete. What a ping off the lows. Doge pulling back down again. Still just kind of hovering in a 15-minute range, not really doing much. Oh, gold. These moves to the upside are exactly what you need to be doing right now. That is perfecto. Keep going just a little bit further. Stay up here over the next 3 minutes, and there are going to be a lot of happy campers. Another drive to the downside. NASDAQ might not be done vindicting the low. We know how they like operating. But the base in that zone around the L3 is a very obvious definitive zone of support now that the L2 broke. And you can see exactly what happened. The buyers who were buying the L2 did the same thing that I did. They were buying underneath the low, bought a little bit more. It didn't technically fail, but when it went back up towards their break-evens, nobody's hanging around anymore. It's like, nah, I'm out. On the re-dip, they reload. Now we can see, do they want to keep this thing going to the upside? It's looking pretty good so far. All these wicks on the bottom and everything. 3 press on the lows. Wish I would have been able to get more than one. We're testing that volume node. Remember, the buyers were trying to get this market to hold up, and we've broken underneath it. This 896 zone, if this fails and the sellers can't rotate this down again and we break above, that becomes a launching pad for a continuation move to finish the job up at the top. Getting a little bit later in the morning session. Look at that volume cluster right there. 96. So far, they've missed it by 2 ticks. Oof. Gold, you're... Come on, man. Up here. Close. You got a minute left. That's fine. You still got a minute. Give that high-sided close. Last trade on the NASDAQ was my one and done. It also goes to show why I like the non-delay. Well, thank you for the plug. I appreciate it. I didn't read it out loud as, yeah, I mean, those are the types of moves where you're going to see a big difference when you're looking at like broadcast delays and stuff, for sure. Getting the move back down into the L3. Possibility of the bottom of this micro wedge again, but honestly, they haven't been able to show up. Like, where are they? Right? Why aren't the buyers taking this higher? Why does it keep going back down? They're going to start losing confidence here if this doesn't go soon. I've lost enough confidence where I don't want to be a buyer again. And it looks like a lot of other people have too. Who wants to buy it when it's not giving you the bounce that you want? I mean, it's giving some nice bounces. The bounce that you want, though. All right. The WACD is 50% active. We've got the blue line hitting it. Some sellers will be activating shorts inside of this move or above the highs. 78.3 would be the first area of interest. It's still very early and it's only 50% active, but this is a major zone of interest. Again, swings. Options on gold might also be a very good alternative. And here it sits. There's not much happening. What do you think about shorting Doge? And do you think it will maintain its... my initial approach is similar to that of any other big, gigantic, huge move out of nowhere. Look at history. What did it do previously, right? When the last time it did that, when it went nuts, what did it do? Now, I'm not talking about like a 15-minute perspective. I'm talking like, on a daily. Now, on a daily, when you first load it up, it might look a little bit weird because obviously this went from like 5 cents to 45 cents. It's gonna look a little bit funky. But if you go down to the bottom right on TradingView and you click log, that will change it to the logarithmic scale. It'll make a little bit more sense as to what's going on. This is all based on percentages instead. So as far as the percentages, if we look at the last time we had a very strong break above the highs. Right over... Actually, I'm wondering, can I find one that has more data? Bing Bon? Okay. Let's look at Bittrex. No? Who has the most Doge data? Binance didn't. BitMEX? No, those are the swaps. Qcoin, maybe? Nope. Huobi? Nope. Someone out there has to have data from year... Okay, I was going to say, it's got to be Bittrex, right? Okay. So this goes back at least to 2018. So we can see that it's been stuck at this 005, 006, 007 forever. And when it finally broke out of it, created a small little flag, slam back above. When it broke out above the highs, that's what we want to pay attention to. What did it do when it broke out above those highs? We broke out above the highs. That point was at 0139, and it rallied 535% to the upside. The initial rally, this is the one that I'm more interested in, was 438%. That's a realistic one, in my opinion. So when I'm looking for a break above this next high, I want to see, is this going 438-ish %, right? Is this moving the same distance? So if we look at this other high and we go up, well, this move up is 418%. That doesn't leave a whole lot of room, right? There's not a whole lot of upside potential here, maybe up to like 50 cents, but that's about it. I mean, don't get me wrong. I would love to see 69 cents today and have Doge meme it up and everybody's all happy and hunky-dory and it prints new millionaires again, but it just doesn't seem feasible, right? From a volume perspective, 48 cents up to 50 cents is kind of the brick wall. And then from there, we can see that it stalls out for a little while. So this is where you want to measure how long did it stall out, right? It stalled from there to there, about a month, 24 days. After this topped out, it stalled for 63 days. After this top out, it stalled, man, this one stalled forever, 175 days. So the stalling is getting, it was a little bit shallower. Now it's a little bit wider again. If they are going to find a top here, we're probably going to be stuck here for a good month or so. And we're pretty close to the top. So do I want to be a buyer up here? No. This is where I want to be taking profit. I still want to hold some in case the thing goes nuts and does go to like $4.20 or something stupid, but hey. Gold. I didn't get a fill. No fill on 78.3. At least not yet. Going on 10.20. A little bit early. Or a little bit late, later in the afternoon. As far as the trader's concerned, it's still morning, I know. So while things are slowing down a little bit and while we're waiting, feel free to get those questions in. I'll get those covered for you. And yeah, if there's a market that you want me to look at, feel free. Type it in. I'll take a look at it for you. Sure. It doesn't bother me. Just be specific. Like if you want me to look at Doge, tell me what time frame, right? If you want me to look at Coca-Cola, tell me what time frame. Gold's still trying to fade above the highs here, 78.3. From a value perspective, euro, the euro is holding nicely. We've got that really nice pullback to the tick of value. Absolutely insane. I would still like to see that double down value. That's below 1.2. Can you go over 3 press wedges? Yeah, so 3 press wedges, obviously, in the academy on SSFTG, the Day Trading Academy, it's covered with a lot of other things. And I think there's a few videos on YouTube as well that I go over it. The general concept is more based off of psychology, which is why I prefer the 3 press. The 3rd press, the first press, right, this is usually a surprise move. This could be like a stop run. It could be a trend reversal. It could be, a trend that's been going on forever and ever and ever, and all of a sudden it just jukes and goes the other way. But either way, usually this first move up took people by surprise. Then we get the pullback. This is the initial buyers who were right. You got to remember, there's 2 sides to every trade. That means that there were buyers. These buyers were likely taking the low probability side of a trade, meaning that their risk was low, but their targets were high. They got their targets. So they're taking profit, right? And that's what this pullback is. We're seeing that profit taking on this pullback. The expectation is that buyers on this rebound are going to be looking for a continuation leg for another move higher. So you get this pullback phase. And that pullback phase usually goes into the continuation up, if it's going to stick around as a trend. That's leg 2, right? That's the second press. Now you have all of the buyers who were buying this pullback, looking for continuation. They weren't surprised. They were prepared. But keep in mind, it's not just buyers buying here. It's also shorts who are potentially stuck getting out at break even. We've seen those POC shifts constantly this week, over and over and over again. So you have sellers repositioning out of trades or repositioning even more into trades, etc. But it's all happening in the same spot. That creates that second leg. Well, what happens when we get to the highs? All of those buyers take profit, and we get another pullback, and the market pulls back again. This pullback usually lasts a little while. It's usually not an immediate jump back to the upside. This is the messy one. This is the one where buyers are trying to get continuation, but sellers are trying to get it to rotate off of the highs. You know, this is where it sticks around for a little while, but inevitably the upside objective is to achieve a new high. That's the third press. And this is almost always, not all, I mean, you can't say all, always, but almost always the weakest of the legs, because everybody is doing at this point the same thing in the same place. They're selling as soon as it hits the highs. So that creates a much stronger leg down, which goes into the TUL2 pattern in the Academy. For those of you paying attention to what's going on here, that's the deeper pullback. The buyers are looking for continuation. Again, this doesn't mean that it's a total reversal and the floor is going to fall out and to expect complete chaos. But what it does tell you is that there's probably going to be a deeper pullback. Maybe don't keep going with the original trend. It's the same thing that we had back here, right? I wanted to be a buyer on the L2, because that's what the market was telling me I should expect. But if it breaks down, then I'm expecting the L3. So far, that's what's supporting, although, again, still pretty ugly. Seems like a Wyckoff pattern. Very similar, yeah. You'll find this across, and this is the cool thing, and this is what makes the markets. When you analyze the markets enough, across enough different things, you'll find that they end up right around in the same place. Right. So it kind of goes to show, like, it doesn't really necessarily always matter what analysis you pick. As long as you pick an analysis and stick with it, you're probably going to end up in around about the same place as everyone else anyway. This is utilizing nothing even close to Wyckoff, but it looks very similar, right? It's the same concept. It's crazy. And for some people, even though they look identical, Wyckoff might cycle for them in between their ears, their brain meats. It just might not make sense to them. But something like this does. Or something like this makes no sense, but Wyckoff does, even though they're very similar. It's funny how that works, isn't it? Anyway, I hope I got your question, JT. But that's the gist of a three press. Now there's a lot of variations, just like everything else. A three press could look like a head and shoulders, right? It's all context based. But generally, for me, when I say three press, it's three higher highs in a good point of interest or a zone of interest. So like right here, as an example, would be a fairly obvious three press high. Even though they kind of built it in a funny way. I mean, little herky-jerky, you can still see the LD inside of that as resistance. I guess technically the three press was here. Do you think it's a good idea to scale into shorts between 56 and 58 on Bitcoin? Man, asking me if I think shorting Bitcoin. No, I'm just kidding. From a trade perspective, right now the bears obviously own the market, but there is a huge caveat on that. They missed the low with a dramatic failure. Right, that near miss on the low scares the crap out of me. So if I wanted to be a short on Bitcoin, I would have to agree that the 56 half, I don't know that I would want to go to 58. I think that it's got to hold a lower high in order for it to succeed here. That would continue the trend to the downside. If they do break a further high, they'll probably see an initial response back, but that's more likely going to be sellers getting out before a continuation back up again. That would be my concern. Now, keep in mind, this pullback here, I mean, this could go all the way back down here. So, I mean, it could still be a very deep pullback, but that would be the concern. So I agree with the short, but I wouldn't want to see it break much above. If it does go above 58, I mean, it's got to be almost an immediate rejection, right? Right back down again. If you're looking at it from the cycle, I mean, obviously they broke through the lows there, but from the top, we initiated the cycle off of an L4, so it is a viable trend. We continue back down to an L3. Then they continue with a breakdown off of an L1, and then it went catatonic. The big breakdown held the L1, continued lower. They dipped back to an L2, couldn't make a new low, right? And that's the concern. The one thing that I do love about this and why I love the lower high is because this would be a retest of the inside of that L2 without breaking the highs, and then a response back down again. So I would really want to see an immediate rejection here, where it just goes boom. It's lining up with exactly that. It's just this miss on the low scares me. I don't like that. And given the bullishness off of the lows, makes it a little harder. Gold's just toying with my emotions right now. All right, let's do last call for questions and we'll wrap it up. For some of you, given the date, that means that it's time to celebrate. For others, depending on the side of the world you're on, it might be a little bit early, or it might be illegal by you. Try not to trade in that state of mind, please. Do me a favor. After. It's just like St. Patrick's Day. Don't go to the bar and then go trade. That's not the way to approach it. Been a tough day? Yeah, I mean, it's... I got juked out of every trade that actually had some potential. I mean, it was an early jump for me on every single move. I wasn't able to catch a run for much at all. And I definitely had to fight my way through a couple of them as well. So I doubt you're the only one. It's an unfortunate side effect, but I mean, it's the second day in a row now where there's just zero news. There's nothing going on. So all we have is really technicals, and everybody's kind of enjoying the warmer weather now. And today out of all days is 420. So who knows when people actually show up to work? They found their way there. I don't know. It's definitely not been an easy one today, for sure. A good learning day, I think, more than anything else. Just seems like Bitcoin's getting tired. Alt season is going crazy, and this just asks for trouble. Oh, I totally agree. And, you know, we were kind of joking about this in Discord chat, too, where Bitcoin's kind of like your dad owns Bitcoin. Like, it's not cool to own Bitcoin anymore. It's not the hip thing to have, which I know is a really stupid reason to execute a trade. But I mean, seriously, we're talking Dogecoin here, right? This is a meme coin, so it's just not, you know, it's not cool. It's not edgy. It's not, hey, you know, oh, what do you have in your portfolio? Oh, I got Bitcoin. Oh, okay, yeah, like so does the rest of the freaking world. Like, great, grats, you know, whatever. You know, like it's just not cool. It's not the edgy investment. And a lot of people like just having that edgy investment, even if it's a small percentage. And given the way that Doge is moving, right. Gold executes the short to the downside. Now, the downside objective on this move, this is a WACD. The WACD is still very early. This could potentially still chop around and go negative and go up a little bit further. It's early. But this is the zone. We're in the area. The downside objective is for this to rotate back down towards the lows, preferably if they can get it down there to the lows of a channel. Not so sure they'll get that. But the downside objective from a volume standpoint, if we look at this rotation lower, obvious objective, 70.5 is the volume node. 71.5. That means that from a risk tolerance perspective, I am unwilling to accept a risk larger than 81.8. That's beyond 2-to-1. So 2-to-1 shorts, that's where they're looking for the downside. Otherwise, they'll be building in, of course. But now it's just a waiting game. See if they want to keep going. NASDAQ, I just don't see the buyers sticking around. Like, how many times they got to get punched in the face before they just give up? It's been lower high, lower high, lower high. Or if it does make a higher high, then it immediately gets pummeled back down. I could see buyers maybe at the L4 with stops underneath the L4, targets back to L1. That's a very nice reward versus risk, but L3 is getting tired. All right, not seeing any other questions coming in, so that's going to do it. Oh, hang on. No. NASDAQ's ranging. Is that the sellers and the buyers duking it out? Yeah. Essentially, think of it from a perspective of balance. We're probably in a big zone of interest on two different areas, right? A lot of times, given that the market's been incredibly strong, we're likely at a small or shallower point of support, maybe like a spike in channel. But at the same time, we're also potentially at the top of a larger channel that just had a blow off on the highs. So a lot of times when you get this congestion, and this might not necessarily be the case right now, but it's because you've got sellers who are trying to sell the bigger picture and buyers who are trying to buy the larger picture, and it ends up getting a fist fight until it makes a decision. And once you find those points, that's where you can tell where the fight's going on. A lot of times volume does the work for you. So I track volume instead of having to try to find all these different little stupid lines. But it gives or procures the same area of interest. When eventually they give up, that's where the decision is made. And that's usually why I redraw things every day, because a new decision will likely have been made, and that will have changed the perspective. So whenever I'm coming into my larger time frames, I'm always deleting everything. I delete everything on the chart and start over again. So anyway, that's going to do it. Hopefully you had a great day of trading. Not seeing any other questions, but if I did miss some, feel free to shoot me an email, jhb@ssftg.com. Get you covered there. Otherwise, enjoy, rest up. I hope you had a great day of trading, and yeah, that'll do it. Enjoy the holiday if you're participating. If you're not, I'll see you back tomorrow in a clear state of mind. And if you are, make sure that you're in a clear state of mind before you go in the hitting the computer. But we'll see you all tomorrow. All right, enjoy, rest up, and we'll talk to y'all later. Thanks.